Today, in economics, we're going to take a glance into the history of banks and money, how they originated, and what transformations have they faced before becoming the big institutions and symbols we recognize today. The concept of banking is closely tied to the evolution of trade and the development of societies. As societies grew and trade became more complex, the need for a more efficient means of exchange and storage of value led to the birth of money and the concept of banking. Early on, money was created as a solution to the limitation of a barter economy. A barter economy is when people trade goods between each other, such as grains or metal objects, to satisfy needs. These institutions began as simple places for safekeeping valuable commodities, but evolved into vital entities that facilitated trade, managed risk, and eventually became central to the economic and financial systems we rely on today. After introducing the topic, in this video we're going to talk about the development of banking through history, the rise of capitalism and changing concept of money, the current function of modern banking, and finish our video with a conclusion on the topic. In ancient civilizations such as Mesopotamia around 2000 before Common Era, temples and palaces served as the first banks, where surplus wealth, often in the form of grain, precious metals, or other commodities, were stored. These institutions provide loans often to farmers and merchants, with expectations of repayment after the harvest or trade voyage. By around 800 before Common Era, the use of coins as a medium of exchange became common in ancient Greek city-states, further facilitating trade. As trade routes expanded during the classical period, particularly under the Roman Empire, economies became more interconnected. This led to the growth of early banking activities. These early banks began to facilitate the exchange of money and offer currency conversion services to merchants trading across different regions. The Italian city-states of the Renaissance period, between 14th and 17th centuries, such as Florence and Venice, were instrumental in shaping modern banking practices. The Medici family, prominent in the 15th century, pioneered innovative financial instruments, such as letters of credit and bills of exchange, which allowed merchants to conduct trade over long distances without the need to carry large sums of money. This era marked the beginning of banking as we know it today, an industry focused on facilitating trade, managing risk, and generating profit. With the arrival of capitalism in the early modern period, between 16th and 18th century, the concept of money underwent a profound transformation. Money was no longer just a medium of exchange or a store of value. It became a symbol of capital, an asset that could be invested to generate more wealth. This shift was driven by the rise of joint stock companies in the 17th century, such as the Dutch East India Company, founded during the 16th century, and the British East India Company, which was founded in the same period. This allowed for the pooling of capital to finance large scale ventures such as overseas explorations and industrial production. Today, banks have evolved far beyond their original functions. They are not only places where money is stored, but also institutions that create money through lending and manage financial assets and play a central role in the global economy. Modern banks, through their lending practices and investment strategies, have the power to influence entire economies, driving growth or, in some cases, contributing to financial instability. The 20th century saw significant changes with the abandonment of gold standard and the rise of fiat currencies, which are not backed by physical commodities but by government decree. This shift allowed for greater flexibility in monetary policy, but also introduced new challenges, such as inflation and the potential for financial crisis. To conclude our video, we must understand that the history of banking is crucial for grasping its current role. and for anticipating its future direction. Banks have not only facilitated trade and economic growth, but have also shaped societies and influenced global power dynamics. As we face new challenges in the financial world, such as the rise of digital currencies, the increasing complexity of financial markets, and the ongoing debate over regulation. Looking back at the history of banking can provide valuable insights by understanding how this institution has evolved and how its functions have shifted over time. We can better navigate the present financial landscape and make informed decisions about the future. I hope you enjoyed the video. Don't forget to leave a like and comment if you wish more content like this. See you all in upcoming videos. This was Economics.